So property versus Bitcoin. And there's a huge misconception about where you should actually invest in today's world. Do you go S&P 500? Do you go into NASDAQ? Do you just do stocks and shares generally? Or do you go into real estate? I've done all the above. And then I found Bitcoin. So no wrong or right here, but I'll explain a few problems along the way with each one. So let's talk stocks and shares, S&P 500. On average, you're looking at a 10% return annualized, which is okay. It's okay. But when you're looking at how society is run, especially in the UK, but also on a global level, your purchasing power, every £10, for example, is actually worth less and less, right? So you put money into S&P 500, 10% return. Okay, it sounds good. But actually, once you take inflation into consideration, that's been hit massively, right? But it's an option, okay? And we're just going to talk about options. That's the whole thing about this video, options of your investment strategy. Option 2 is real estate. I've done real estate for many years. Loved it, really enjoyed it. It's been great for cash flow. It's been good for refinancing, to take money out and do things that you want to do. If you want to, what I've always been involved in is BRR, which is buy a property, refurbish it, and then refinance it to take that capital out with the increase that you've done on the property. What I like about real estate is you can be in the game. I call it the monopoly game. And what I mean by that is you can basically run it through a company, try and be as tax efficient as possible. Maybe you can apply for capital allowances on that property if it's available, which means you won't be paying corporation tax on any profits that you make within that business. But you can leverage, right? So you can take that money out in the future and do stuff with that. And that's tax free. So you can be in the game with real estate and actually be quite tax efficient and do quite well. But you've got to have a lot of property and you've got to have a lot of down payments to play with along the way. Okay, so there's drawbacks to that. But I always say this, if you're in the game, there's good flexibility and pros and cons of how you can run a real estate portfolio, for example. Like in the old days, it was good to have a property in your own name. And then the government, as they always do, they come after you with compliance. They come after you with tax. And the greed gets worse by the government. But this isn't about that. This is about what different types of asset classes can you go for to make money and what's more interesting and obviously draws you more profit in the long run. You've then got gold and silver or precious metals, which are good. If you look at gold on the long standard, for example, on a long period of time, gold has predominantly done quite well in terms of an asset class. Okay, it's a scarce asset. Okay, so there's limited amount of gold available in the world. Although, to be quite honest, that's a little bit of a smoke and mirrors because you can still mine gold, you can still find it, but it is scarce. But there's not going to be a point at one day where you said, right, that's it, no more gold. Okay, because you can still mine it, you can still find it in certain areas of the world. It might become to a point in time when you can't get it anymore, but it's highly unlikely, right? So let's just say there's unlimited amount of gold, right? So you can't put your cost per ounce set at a certain figure each month, for example. Well, you can, but my point is it's not going to shoot up massively and it's not going to give you huge gains over, say, 20 years, but it's steady. But you've also got to store that gold unless you just buy it on an ETF, for example, where it's just more paper value. But also you've got issues with that, right? You can't transport it. It's not immutable. You can't suddenly liquidize it quickly and reinvest somewhere else if you need cash quickly. And sorry, I should have said this about real estate. Actually, you can't break real estate down and fractionalize it. Okay, so you can't liquidize it and get cash out quickly. I should have mentioned that. So it's more of a long-term, store your capital, which is great. So yeah, precious metals, an option, but limited again. Finally, look at what I really like and what I've studied probably 10,000 hours worth of education on, and this is all about education. This is not financial advice. This is education to understand what types of asset classes are available for you to invest in. Bitcoin. So why Bitcoin? Pretty simply, it's got 21 million coins available. It's now obviously published everywhere. Everyone's talking about it in the press. It's becoming a hot topic everywhere, which is understandable, right? When things go up in price, retail investors, your mum and dad, friends and family, excuse me, they all come to the party and they all want to participate in this new network or monetary fund. But with Bitcoin, what's interesting is it's a fantastic asset class, right? Let's not forget, you've only got 21 million coins and there will only be 21 million coins, right? So when you start to look at asset classes like this, and you compare over the years, and we've gone through, a few asset classes, there's probably more that you could look at purchasing. But these are the sort of fundamental ones, right? That most people will go for when you buy into an asset class of some sort. Well, what's beautiful about Bitcoin is it's fractionalized. You don't have to worry about a leak happening, for example, on a real estate, which you will have, right? The roof could go wrong on a real estate property. The windows can go wrong. You've got insurance, you've got this and tax and blah, blah, blah. There's a whole load. But you usher in this new asset class that's got a 21 million cap. You've got scarcity. You can fractionalize this down. It's war-proof. So if World War III kicks off, which is pretty, it's on the cards, but we won't talk about war. You can look at this particular asset class, Bitcoin, and say, right, I can move this around the world quite easily. I can sell it instantly at a very low cost. I don't have to be in the traditional financial network. Now, that's what I like about Bitcoin. Even with real estate, stocks and shares, everything else, right? You've got to go through the typical monetary network, right? Which I class as tradfi, traditional finance, okay? So let that sink in for a bit. When you look at asset classes like that, you're now, it's like having, it's like when electricity first came out. We were living off candles for a long time, right? Usher in electricity, the world changes. We start to have lights around the house. You can start to function in a completely different way. And the same with Bitcoin. I'm using that analogy. You look at Bitcoin, it's a store of capital. It's a digital capital is how I like to portray it. And that allows you to be debanked. Okay, so you don't have to be a part of a banking system anywhere in the world. It's on its own network. It runs on multiple nodes. And just to recap what a node is a piece of software that sits on a bunch of servers running on a GPU network, which is a graphical processing unit system. So graphical cards that are high powered to solve algorithms or mathematical equations to pay out the miner on the Bitcoin network in Bitcoin, okay? So it's a digital asset class that's got storage of energy, and it's one of the biggest energy networks in the world now, right? Now, when you start talking about actually debanking yourself, so if I can send money to me, to another bank account within my name, to another Bitcoin account in my name, or to friends and family, or to another business, it doesn't need to go through the bank, and I can pay instantly. So there's no settlement. There's no bank saying, I don't want to allow this money to leave the account at the moment. Oh, is it fraud? How many times have you had that as a business? I've been paying staff. I've been paying people abroad, suppliers. I have this. The bank calls me up and says, hey, I'm really sorry about this, but we just had a load of money transferred to this number. We're doing this for security. And then I spend half an hour on the call trying to unlock this. And then I say, yeah, it's absolutely fine. This money can go through, right? And then sometimes I'll sit on it even for a day, right? Don't get me started. But then we start to talk about away from business, or even on a personal level. If you want to pay sometimes, from traditional finance, bank accounts into a crypto exchange, you might have heard of this, right? The banks are trying to stop it. Certain banks allow it, but on a personal level, it becomes a real challenge, right? Because they don't want you to leave the system. Think about it, two games. Number one game over here is the traditional finance world. And number two game over here is being debanked under the Bitcoin standard, right? So it's just a bit of a video to kind of talk about asset classes and discuss how this is benefiting people out there and why you should be looking at Bitcoin. And again, this is not financial education. This is purely just to educate you on different asset classes that are available. Okay, so do your research, study Bitcoin, and then leave your comments below if you've got any questions.